Morning, everyone. Hope you're well. Today, I am going to talk about the tax advantages of short-term rentals. I think something that a lot of hosts don't know about, and a lot of landlords also don't know about. And when you enlighten landlords to the benefits, for me as a landlord as well, I just struggle to comprehend why we do the AST route. In all honesty, and so. There's a lot of benefits. For starters, if you're set up correctly, that is, and depending on how your companies are set up, you may need to change the formation of them. But for one is Section 24. So Section 24 is a tax on landlords who are self-employed, not running their companies through. Not running their properties through companies, should I say, and they basically what it means is their mortgage costs cannot be written off as an expense. So for argument's sake, if they take £500 worth of rent, then they will get taxed on the £500, even if they have a mortgage cost of 200 and therefore the net difference is actually £300 profit. They won't get taxed on the £300, they're getting taxed on the £500. So that's what caused the big shift from investors buying in their own names to investors moving into limited companies. And, it was, quite sizable sums of money, especially if those investors are on the higher rate tax band, and, then they're paying in excess of, 40% to run their property empires. So one shift there, when you go to serviced accommodation, it's no longer a tenancy, it's no longer a fixed rent, and therefore it's classed as trading income. So it is then run and looked at more like a business, and therefore it does mean that Section 24 does not apply to the revenue that comes in. And so typically you will earn more, but the good thing is that you can then offset any costs of that operation against the property, and that can be sizable as well. Your mortgages, your cleaning, your linen, your Wi-Fi's, all that sort of stuff you can offset against the property. So huge benefit there, and especially if you are running your properties on a self-employed basis, if you're in the higher tax brackets, then a switch to short-term rentals could be something that you should really consider. And the more I dig in, I run my properties now through limited companies, and that does avoid that. But then that brings in another kind of loophole. Well, not loophole as such. It's out there. It's it's a tax. The HMRC approved, all that sort of good stuff. But in effect, every time I buy a property and I'm going to run it as a short-term rental, not only can I claim the VAT back on the build, because obviously we will be charging VAT on the operation when we go live, which is obviously a huge sum of money on some of these builds. But the main thing is you can claim the capital allowances of that building back, and most of the time, for most short-term rental hosts are just using single residential type properties, which will more than likely never have had the capital allowances claimed on their property before. So if it's a commercial building and a previous owner has already claimed the capital allowance, then you can't claim it. It can only be claimed once. But on this residential stuff, you're pretty much going to be the first, I would imagine, because for decades and decades, people have just rented these things out or bought them as residential homes since the day that they were built. So you then get a capital allowance surveyor. So you need a surveyor to come out, and they'll assess what the capital allowance value is of your property. Now, this can be tens of thousands of pounds, sometimes hundreds of thousands, depending on, the size of the building. But typically for what we're talking about here with the smaller residential stuff, it's like tens of thousands of pounds. And then what you can do is you can offset that money, the capital allowance, you can offset against the income generated into the business within that tax year. So effectively, it reduces your company's tax liability, corporation tax liability at the end of the year, because you can offset it against the trading income. So if you've made a decent amount of money, and then you've got maybe 5, 6, 7 purchases and the capital allowances in those purchases equate to the same amount of money that you've made, then effectively you can write that off against the income. And it's probably in other countries it doesn't necessarily work like that. It is capital allowances can be offset against capital, but the here we can offset it against income, and it's all above board. It's all approved by the HMRC, and it's a great fit for short-term rental operators. So for me, as I push into 2021 and continue to kind of scale the short-term rental business, as I feel that the market is going to come back, there's no doubt about it. It's been impacted in 2020, but then we have had government support to help us out, so I just really feel like there's going to be this crazy boom. And for me, it's all short-term rentals this year. I had at the beginning of the year, I was going to buy a few more single lets up just to kind of keep the diversification of the portfolio. But I think unless there's a really good opportunity, I will be investing my money into more short-term rental stuff, and potentially picking up a few HMOs just to keep myself diverse on that front in terms of the tenant profile. But I'd rather use a short-term rental property than run it as a single AST for many reasons, as well as the tax advantages that we're talking of right now. But I just find that my owned short-term rental properties are the most profitable line in the business. And, why not run them as that rather than an AST? It also gives you the flexibility when you're out there buying stock, because you are going to get that money back out a lot quicker that you invest. So on a AST, typically you're only getting anywhere from like 200 to 350 a month in terms of a net profit. So, if you get 10 grand stuck in a refurb, then it's going to take you quite a while to get that money back out. Whereas ran on short-term rental, the profit margins are enhanced somewhat. And therefore, that 10 grand that was stuck, it won't take as long to get it back out. So for me, the short-term rental game, the more I develop with it, the more I get into it, the more I do of it, the more I enjoy it. And I just see the better it is for the company in the long term, the better it is for, the value of the company, the better it is for, the reduction in obviously how much tax we'll have to pay, done correctly, obviously, and I just, for me, it's an all round better fit. And as a landlord myself, I've already identified several of our properties that are on ASTs, and I'm not going to kick any tenants out, but as and when we get those properties back, we will put them into short-term rentals. We'll get them furnished. We'll get them done up, and I'm going to run them on that basis, because I just feel like it's a good space to be in right now. I think it's not going to go away. I think once this lockdown's finished, I think that is going to be the last lockdown, hopefully. And I can't really see there being a U-turn on that anymore. Travel will come back, and I think a year, 2 years down the line from now, we're going to have a normal life back again. And it was a great place to be before COVID. We've done well through COVID, considering, and it's going to be an even better place to be post-COVID. So if you are a landlord and you've got a property, if you are experiencing voids, or you've had some troublesome tenants, then it's definitely an industry to consider. And I can't rate it highly enough. All you've got to do is speak to various other short-term rental hosts, and they'll echo the same. And and then you can also look at the tax advantages as well of what you can do with these properties. So, and you'd be surprised. I always speak to landlords, and they always say like, oh, well, I haven't got a city centre property. My property won't attract tourism. That is not what short-term rental is for me, and for most successful operators. Yes, there's pockets of that. If you have a property in the lakes, or you have a property in the Cotswolds or something like that, then yes, you probably are only looking at the tourism. But for the majority of cities and the majority of properties, you do not. Right now, our properties outside of city centres are performing a hell of a lot better than the ones inside city centres. So, there's just, something that might change a lot of people's mind. A lot of the stuff is, obviously, we've had no weekends traveling for the last year pretty much, but we're still operating as a business and we're still making money, so there is another market out there that you can tap into. We have, anywhere from like 40 grand properties up to like 250 grand properties on this model. You know, it's like it's totally different. I'm currently developing a block of flats that will run on this model. So the variation of property styles that suit the short-term rental model is huge. And as a landlord, I quite often get asked, you know, will my property work? And it is just a simple case of doing a quick analysis. And I can probably tell you within 5 minutes whether I think it's got a good chance of working or not and being more profitable than a short-term tenancy. So if you do want that, just ping me a direct message or just drop a comment below saying you'd like your property to be analysed, and I'm more than happy to do that for you. Honestly, it takes me 5 minutes, give you a quick viability of yes or no, whether it's worth exploring or not. And you know, there's so many benefits. And you know, today's topic was all about the tax side of it. You know, the Section 24 plus the capital allowances. I think the capital allowances one is just it's a game changer for landlords if they do it properly and if they're set up properly. And it's just one of the reasons why I think most landlords should be getting involved in this space. And you know, even if you don't want the hassle of running the operation, there's always enough margin in using a management company. And a good management company, you know, I'd like to think we're a good management company. We will probably more than likely add our fee on top in terms of value, you know. So a general operator will run at a certain level, who, you know, they might be doing it as a side hustle, or they might not be as experienced. They might not know how to play the booking algorithms, how to drive direct bookings. They might not have the team behind the scenes to just support the professional function of the business. So by us taking over somebody's property that hasn't got that, I would like to think that we more than add our fee and difference in enhancing the operation, reducing the expenses, making it more efficient, and not only that, taking away the hassle as well. So don't always think of things as a cost. If you find the right people, it's an investment, and it's no different with a management company. So you don't always have to run them if you are a landlord thinking about switching. But anyone wants any more advice on that or any questions, please just pop them in the comments, and I'll get back to you. Have an awesome day, everyone. Take care.